Well, it looks like we're live on Facebook, LinkedIn, and YouTube. So let's say hello to everybody and let's go for part 2 today for our live stream. Welcome to Paul Archer's Monday afternoon live stream. Hope everybody's well. Hope you've had a good week and all those good things. We went down to Devon at the weekend, Shirley, and I went down to Appledore. It's a beautiful little village on the North Devon coast. It's only a couple of hours away, so we nipped down there for a couple of days, which was rather lovely, walking along the beach and everything. So a lovely, lovely weekend. So back to normal, then back to mortgages. What's going on in the mortgage market? Lots of activity, of course. We've seen that. The springtime buying spree is beginning to happen. There's more first-time buyers coming into the marketplace has been recorded. There's a few more properties coming on. We need a good spell of properties coming on the market, really, for the housing buying and selling market to really get going. Anyway, we could talk about that forever, but there's other people that talk about that all the time. Let's get on to a couple of topics I've got planned for you. Now, the first topic I've got planned for you is an interesting one on funeral plans, and then we're going to pick up on some FCA matters because I promised that we'd be doing that as we progress. So let's talk about funeral plans. Shall we? I'm going to go over to the whiteboard for this one. Let's head over there. Well, I put a jacket on today, so I'll dress up for you a little bit as well, so why not? Funeral plans. You probably read about it, probably heard about it. Hopefully you've not needed one at this stage. Maybe your clients have as well. But the whole point about funeral plans is the FCA are cracking down on them. That's the key here. Let's put a title up there for you, for funeral plans. The FCA are cracking down on these because of, well, they reckon mis-selling and misadvising and all those good things. Now, what is a funeral plan? Well, I've been watching The Ozark recently. We're on series 4. I think we're at the end now. A new one's coming out in April. Ozark is an American sort of crime movie, really, sort of series involving this guy called Marty Bird, and he's a money launderer. He's a financial advisor, actually. Whether those two go together, I don't know. Shouldn't do. But one of his money laundering escapades is to buy a funeral parlor. And of course, they're always looking to increase their income. They're always looking to cross-sell and upsell. And one thing that he was considering doing is funeral plan insurance. And that's what funeral directors are doing. They're just adding an insurance plan to their repertoire, if you like, to make some extra money. So it's purely cross-selling, that's all it is. But these people you see are not insurance-trained specialist people. So you can see why the mis-selling has probably creeped in, isn't it? So what is a funeral plan? Well, broadly speaking, if somebody is over the age of 50, but you can get them at a younger age, they sell you insurance where you pay money into this insurance scheme. And when you need a funeral, in other words, when you're dead, it pays for your burial and various associated costs. And there's pretty much all there is to it, really. Now, the benefit, of course, of a funeral plan is that you don't have to get your next of kin to pay for you or worry about the costs of the funeral. And you're basically saving, if you like, towards it. But it goes to the funeral company as such that operates it. There's a lot of plans available. I just want to share with you a Google page, really. I just did a bit of Googling. Let's just change the screen for you. I put in their funeral plans into the system. And as you can see, we've got quite a lot of funeral plans available. Here we've got British Seniors over 50 funeral plans. There's the Co-op. They're one of the market leaders. We've all heard of the Coop or the Co-op. And by going into this site, it tells you all about funeral plans. So compare your funeral plans. If you're looking for a prepaid plan, give us a call. Complete service, flexible payments. Tells you about how to choose the funeral plan for you. Our awards and ratings, and there's the different types of plans there. Simple, bronze, silver, gold. Very old-fashioned marketing there going on, but that's the way it is, isn't it? I'd go for gold, wouldn't you? I don't know what you want. But as you can see, you've got monthly payments there, and it's guaranteed, therefore, to pay the costs. So you're taking a bit of a punt, really, that you're going to die at some point, and that the funeral gets paid for you. And I think it's a good thing. I really do, because there's a market for this sort of thing, and these people have got money to spend on it as well. Anyway, what's happened, of course, as mentioned to you, is that the FCA are going to regulate these. And they reckon about a fifth of all plans, or a fifth of all funerals, I should say, are actually paid for now by plans. So it's big business. But the FCA, of course, are zooming in, and they're going to, from the 29th of June, let's just get to a date there for you for interest, 2022, they're going to make sale of these plans needing to be regulated. In other words, you need to be authorised in order to sell these plans. It's going to be another authorised permission, if you like. Now, are they all going to do it? No. Some have said they're not going to because they can't probably achieve the benchmarks the FCA want. The big ones will do, Dignity and Co-op, people like that. But because they become part of the FCA family, then holders of these things will be able to financial compensation scheme. So the financial services compensation scheme will click in. So in other words, if the funeral company or funeral plan holder goes bust, insurance company goes bust, then people will get their money back. But also it opens up the FOS so people can make complaints, which probably is going to cause a few issues, isn't it, at some point. So that's pretty much all there is to it, really. It's going to be regulated. Will you find much in the CMAP syllabus? If you're redoing the CMAP, there might be a little bit in there on it because it's a regulated product as such. So it's worth updating yourself. Is it going to affect your world as a mortgage broker, mortgage advisor? Probably not. Will you want to get involved in this marketplace? Probably not, but it's entirely up to you. You might find that a big insurance company like Aviva might make these products available for you to sell to your clients. Is that cross-selling in your marketplace? It might be. It depends on your market, really. I can see somebody in the later life marketplace talking about equity release. It might be something to mention at that point. It's obviously a fully authorized product, so it's going to be sold and advised in the right way. But it's possibly worth thinking about. There is a tax benefit, by the way, of these. We love a bit of tax benefit, don't we? The money that's paid out is there's no inheritance tax payable on the money that's paid out from the insurance plan. It's not a big deal, is it? 4 or 5 grand isn't actually going to break the bank when it comes to inheritance tax. And probably the people that have got an inheritance tax problem probably won't buy these plans. I don't know what the demographics are, but it may not be a major benefit. So that's an update for you on funeral plans. Hope that's been a little bit of an update useful for you. Bye. There you go. So that's a good little topic there for you, isn't it? On funeral plans. Now, what I'm going to do now, just to sort of get ourselves into the right frame of mind, is to start looking at or continue our FCA series for you, because we've been beefing up the FCA series of videos to help you understand the FCA and regulations, etc. So we're going to do a couple of topics, I think, now. The first topic, we're going to take a look at supervision, FCA, and how they supervise firms. And then we're going to take a look at the 3 tiers of how they operate as well. So let's do that then. Let's give the board a bit of a wipe. And we'll get on to the first topic then, which is the FCA and how they supervise is what I want to look at next then for you. So the Financial Conduct Authority then, and supervising firms. Now, as you know, of course, the FCA supervise all firms who are authorised directly through them. So you've got a title there for you, just get this one kicked off, FCA and supervising firms. Now, put it into context here for you. First of all, you may not be supervised directly by the FCA. I've been doing some coaching this afternoon. I've had a couple of people who've been working with me, and they're members of networks. One of them's a network member, one's an AR or a brokerage. They're not supervised by the FCA, these 2 people, because they're part of a principal firm. And that's the thing, isn't it? Because, as you know, of course, with the system, you have the FCA at the top, and the FCA will regulate firms direct. So they might regulate this broker, for example. There you go. Or they might regulate a network. There you go. Or they might regulate a lender direct, maybe a lender with advisors. So there are 4 examples of who the FCA might regulate and authorize effectively. Now you, the individual advisor, you may well be tied to one of these. So you might be, for example, an AR, let's put you in the picture here, of this broker. Or you might be an AR of the network. So you're actually supervised by the network or the broker. That's the point. You've got a supervisor, you've got an individual, a compliance officer maybe, somebody who's responsible for your work, and they will keep an eye on you. What I'm talking about here is how does the FCA supervise the firms that are directly authorised with them. So that's what we're talking about. Now, they do have a number of principles which they want you to adhere to. Now, the FCA are very much into principles. No longer do they have a great big rule book anymore. They have lots of little principles. So I want to share with you now the 10 principles that you need to be aware of. I've got a slide which I created here, so I'm going to put the slide back up for you so you can have a little look at that slide for you. on FCA and supervising firms. Just to take you through it really, just to give you a few ideas. Now, we're talking here, of course, about the 10 supervision principles. Would you get a question on these in the exam? You might do, but they're pretty straightforward. They're pretty common sense, really. The first one is that you must always ensure fair outcomes. So when you're being supervised by the FCA, you must make sure that you ensure a fair outcome for your customer. Now that's compliance speak, of course it is. Customer outcomes is very much what we talk about. We don't tend to talk about that with customers, do we? But what we're looking at there, as you can appreciate, is somebody who cares for the customer and the customer's journey, as they call it. Being preemptive is a key thing about being supervised. They want you to be actively looking for activities in your business to make sure that you are being totally compliant and thinking about customers as well. Focus on strategic rather than tactical. They like you to be able to be aware of how you strategically operate your business as opposed to being more tactical, sort of day-to-day operations really. They operate a judgment-based approach as well, the FCA. So when they're supervising firms, they often will take judgments according to how much time to spend on you and what's involved as well. So it's not always cut and dried. They want to make sure firms comply with the right spirit in mind, not so much the letter of the law, but with the right spirit when it comes to regulatory aspects as well. They love focusing on culture. They've really pushed this recently. So when they come and see your firm, they will look at your culture. What is your culture of customer interaction, customer outcomes as well? So that's something that is very much focused on. They do obviously focus on individual accountability. Senior management and certification regime, of course, has brought all that in. So they will want people to be individually accountable for operations. They want you to be fixing problems, if there are any, naturally. They want you to communicate well with everybody, with the regulator, with all sorts of people as well. And then finally, they're looking for consistent messages, and that's how they're going to operate. So they're the principles in which the FCA will supervise firms. Now, I don't know about you, but there's nothing really different there to what we've come across before. The culture one is one that they're focusing on a lot at the moment, which makes an awful lot of sense, doesn't it? Ensuring fair outcomes. They've brought in the new consumer rules as well, which we're going to do a video on next week. The new consumer rules make sure that people or firms focus on the customers or the consumer more than ever before. So as you can appreciate, therefore, just change the view for you, they're the principles which the FCA will want to be working with. So how then do they supervise firms? How do they prioritize? Because the FCA have only got so many people available to authorize and regulate and supervise firms. They can't supervise everybody. So they're going to use their resources wisely. So if you take a look at the FCA up here, they've got quite a few staff. I think they've got 3,000 or 4,000 people working for the FCA, but that's not huge numbers at the end of the day. If you take into account the financial services sector's got probably over 100,000 people involved in it if you take all the sectors. So they do prioritize, which is probably why if you operate for a small broker that's directly authorized, you probably don't have any communication with the FCA at all, maybe emails or things like that, and data obviously, but you won't have a person from the FCA will visit you at all. They're more interested in the bigger firms. And what they do is they will categorize the firm according to the likely impact on the consumer. So the number of customers they might have and the likely impact. So they have to prioritize. There's no other way of operating. And they have these two ways of looking at it. They call it a fixed portfolio. You might have heard the word before. They call it a fixed portfolio and a flexible portfolio. Yes, I've put the proper word in there for you. Folio. And that tells you what they do differently to different firms. Now, a fixed portfolio are larger firms. This would be a lender, for example, or a big mortgage broker, for example, or a big financial services firm. It's got a lot of customers and therefore has an impact, a likely higher impact. And you'll probably have a dedicated person from the FCA that will look after you. You might even have a good old-fashioned account manager, if you like, that looks after you from the FCA, because you're big enough. You've probably got a massive compliance department of loads of people, lots of supervisors, lots of compliance people who look after all the ARs that you have or all the employees that you have, but you've probably got some dedicated person looking after you. That's known as the fixed portfolio. Now, the flexible portfolio is all the others, really. These are the smaller brokerages, the smaller firms, which have a small number of people there, don't tend to operate or have a massive impact on consumer outcomes. So why they call it fixed and flexible, I don't know, but that's just the way that they operate. And that's the FCA in supervising firms. Hope that's been useful. Bye. There you go. So that's just a little update there for you on FCA and supervision as well. So what we're going to do now is just finish off by taking a look at the supervision model for you, just to give you up to date on that one. Hope you're well, by the way. Hope everything's working well for you in the industry. Hope you're enjoying March and moving forward and keeping yourself as busy as possible. Lots going on the marketplace at the moment. We're very busy with training new people on CMAP. We're doing lots of stuff on our academy, our professional development foundation as well, giving people the sales skills and different skills involved. Lots of new people coming into the sector who are all very hungry and very keen to get going as much as possible. So let's just move on then to our next stage, which takes a look at the FCA again. We're going to take a look at the supervision model that they work with, the FCA Supervision Model, which I've got a graph for you, or graphic, which I want to share with you to show you how this all works. So let's go straight away then to our slides for this one for you. So talking about the FCA's supervision model. So here's the picture I've got for you. And we've got 3 pillars on the slide. Now you can probably imagine, of course, everyone has a pillar these days, don't they? The 3 pillars or the 4 pillars or whatever it is. So if you can read sideways, you've got 3 things going on here. Let's get a different dot there. You've got proactive, reactive, and issues and products. So this is how the FCA supervises firms. As I mentioned to you earlier, they don't have all the time in the world, millions of people on the road. They've got to prioritize. So they have these 3 pillars. And the first one there, the proactive one, or scheduled firm supervision. And this is more of a forward-thinking operations of the FCA. They will have scheduled or forward-thinking activities which allow them to supervise firms. So that could be, for example, the work they're doing on culture. They'd only do it for fixed portfolio firms at this area. These will be for the bigger firms where they have scheduled visits and scheduled operations. Very proactive, as you can see, all booked in, scheduled in advance. So large areas of business going on there. Then you've got pillar 2. Now, pillar 2, I prefer to call it reactive. They call it event-driven, which is a little bit confusing because these are events as well. But what they're saying here is that things have happened in the marketplace, an event has occurred, therefore they must be reactive to it. So the best example here would be COVID. COVID, of course, was never predicted, therefore the FCA had to react and look at supervision of firms in view of the COVID situation. And the final one, pillar 3, is what they call issues and products, or thematic, or themes. This is where they will pick up on a specific theme, a specific product, and they will investigate and supervise based upon that. So there might be, for example, we had the new customer pricing. I've had some renewals for my buildings insurance recently and my car insurance, and they were actually cheaper than last year. And my buildings insurance was vastly cheaper. I had some professional indemnity insurance was cheaper because the FCA, of course, had a theme because they were worried that insurance companies were charging lower prices to lure people in, and then on renewals they were ranking up the prices dramatically. And that all stopped in January, and they had to have the same pricing for new customers as well as existing customers. So that was a theme. They were working on it, and they brought in the results of that one. I talked earlier about funeral plans being authorised now, regulated. That would have been a theme because it was a product which they were worried about. So they looked into it, realised there was some mis-selling going on, and that became a thematic review. They're doing the same with the AR regime at the moment as well, looking at appointed representatives. Again, that's a theme, and they will take action accordingly. So as you can see, therefore, that's how the FCA supervise using the 3 pillars. And that's just a very quick video for you on the 3 pillars. Hope that's been useful. Bye. There you go. So a couple of short sessions there for you on the FCA, just a little of an update. We're always updating our materials and making things a bit fresher as well. So that's basically what that's been designed to do. That pretty much brings to an end our live stream on this Monday, the 7th of March 2022. Very spring-like out there as well. Lots going on here, as you can appreciate. We've got a new boot camp starting later on this month. I think it's the 21st of March. I think the new boot camp starts a couple of weeks' time. Your chance to join a number of other people where we take you through the full CMAP over a 3 to 4 month period. It's all online, so we have like a portal, people access it, and they do all their learnings via these videos that we create and audios as well. But each Monday we have a live drop-in using Facebook or Vimeo where you can drop in and just ask questions if you wish to. So you get looked after in a cohort. That starts on the 21st of March, so we're quite excited about that one. Other than that, have a great week, everybody, and we'll see you next week. Bye for now. Let's put my favourite picture up there for you. I must get a different picture, I think, to say goodbye with you on. Anyway, enough of that.